Hey everyone, and welcome to today's end-of-day market wrap-up for August 12th, 2026. We're coming to you straight from our premium trading room setup today, cutting right through the noise to bring you the high-signal data you actually need. I'm thrilled to be your guide through today's tape, and trust me, we're going to break this down with the precision of a Wall Street veteran. So let's get right to it.
Here is exactly the alpha you are getting in today's explainer. We've got 5 key sections: the macro picture, the top gainers and losers, a quick earnings season wrap, some juicy street scuttlebutt, and finally, we'll map out tomorrow's playbook.
Okay, let's dive right into this. Section 1, the macro picture. We've certainly had a stormy macro environment to navigate today.
24,436. Let's punch that number in. That is exactly where the Nifty 50 closed today. Now, yeah, it marks a slight dip and technically our second consecutive down day, but you know what's absolutely crucial here? The context. The index showed incredibly strong recovery off those intraday lows. Basically, the buyers stepped up exactly when things were looking the bleakest.
And if we jump over to the BSE, the Sensex closed at a crisp 77,966. Again, it ended down for the day, but it brilliantly illustrated the market's underlying resilience. Get this, at one point midday, the Sensex was down a massive 530 points. To claw all the way back and defend that 77,966 level, that tells us there's still serious demand waiting in the wings, even when the broader headlines are bleeding red.
So, what was dragging us down so hard initially? Well, it all comes back to global cues and catalysts. We've got Brent crude stubbornly hovering near $90 a barrel, mostly thanks to that ongoing deadlock in the Strait of Hormuz. When you combine $90 oil with a weakening rupee pressing near 95 against the US dollar, you're looking at a recipe for intense margin pressure on our oil-sensitive sectors. Not to mention a ballooning import bill that directly hits the companies sitting in your portfolio. And globally, Wall Street has been incredibly soft, as everyone basically holds their breath waiting for the pivotal US CPI data to drop.
Looking at specific corporate catalysts, we did have a major development out of the U.S. courts today. A U.S. court has officially dismissed with prejudice the criminal case against Gautam Adani and related executives. The market reaction was immediate. We saw Adani Group stocks jump by about 3% on the news. By clearing out this massive legal overhang, that group risk discount is rapidly narrowing across the board.
Now here's something that brilliantly illustrates how index structures create massive liquidity events. The National Stock Exchange just announced a major reshuffle. Wipro is officially exiting the Nifty 50, which means we are definitely going to see some significant passive exit flows from that stock. Stepping into its place on September 30th, BSE Limited. This confirmed inclusion is sparking serious momentum because all those passive index funds are going to be forced to buy BSE to track the benchmark.
All right, Section 2, top gainers and losers. Let's shift gears to specific stock performance, because some names acted like high-speed speedboats today, while others, well, they looked more like shipwrecks.
Let's kick things off with the winners. National Aluminum absolutely led the F&O pack today, closing at a solid 420, up an impressive 8.2% on the back of firm LME alumina prices. We also got to give a wry nod to the high beta crowd finding some serious bids today. Check out FORCEMOT popping over 5% to close at 19,269, and Vodafone Idea catching a 4.7% bid to close right at 14. PIIND found some value rotation love, closing at 119, while Bell is continuing its turnaround momentum, closing at 420. The bulls were definitely hiding out in these pockets today.
But hey, you can't have winners without losers. Taking a massive Godrej-sized tumble today was Godrej Consumer Products. The stock just plummeted over 11% to close at 910, following a surprisingly weak quarterly margin read, and that aggressively dragged the entire FMCG pack down with it. PI Industries also had a really rough session, dropping 9% to 2,483 on a soft quarter. TCS slipped down to 2,350 on U.S. demand worries, and Fortis gave back some of its recent gains, closing out at 900 flat.
Moving right along, Section 3, Earnings Season Wrap. We are officially closing the book on the final heavy batch of the Q1 FY27 season.
We saw a massive batch of key reports clearing the deck today. I'm talking about the big guns. Tata Motors, HAL, IRCTC, and Grasim all released their numbers. We also saw critical reports from Petronet LNG, Sun TV, and Apollo Hospitals. So with the bulk of the market having finally shown their cards, all eyes turn to tomorrow. Make sure you flag MAXHEALTH on your screens. They are absolutely the pivotal earnings report to watch for the August 13th session.
Which brings us to Section 4, Street Scuttlebutt. It's time to lean into that unverified market buzz from the dealing desks and forums to give you that forward-looking insider edge.
Now, what's really interesting about this slide is the chatter hitting forums like Reddit regarding SBI cards. The buzz right now is that the RBI's proposed NBFC revolving credit norms could seriously compress the economics for card issuers. Now look, final norms are still on set and they often get diluted before taking effect, but this definitely presents a medium probability margin pressure risk. If you're holding SBI card, this is a narrative you've got to monitor closely. No need to panic sell just yet, but keep your eyes peeled.
Over on the newswires, the scuttlebutt surrounding Adani Ports is fascinating. With the U.S. criminal case completely dismissed, the talk of the town is that this officially reopens the door for global index and ESG fund re-inclusion. There is a very high probability of continued re-rating momentum here, right alongside a fresh CapEx expansion narrative for the group. The legal dark cloud has officially parted, and institutional money might just come rushing back in.
And on the institutional dealing desks, the talk is all about BSE Limited. The chatter is that the confirmed September 30th Nifty 50 inclusion is going to front-run some massive passive buying. This is completely reviving the derivative volume growth story for the exchange. Because that index change is fully confirmed, there's a huge, high-probability squeeze risk for BSE shares ahead of the actual event. Definitely want to watch.
Finally, Section 5, Tomorrow's Playbook. Let's guide you on exactly how to position yourselves for the next trading session. First up, let's lay out the precise option chain boundaries. For the Nifty 50, the max pain clearly sits right at 24,000. You're looking at a heavy ceiling of resistance at 25,000 and a solid floor of support way down at 24,000. Over on the Bank Nifty, max pain is parked tightly at 57,900. And interestingly, both major resistance and major support for the banking index are heavily clustered right around the 58,000 level. These are your crisp, strictly defined battle lines for tomorrow's session.
But remember, those technical levels will absolutely be tested by our macroeconomic swing events. First, that U.S. July CPI data. A hot print there will wipe out rate cut hopes in an instant and put pressure on emerging markets. Domestically, we have India's July CPI. We're watching the food inflation trajectory like a hawk ahead of the next RBI meeting. And of course, keep one eye glued to Brent crude near $90. If it breaks higher, that import bill risk becomes a harsh reality. These are the events that could gap your portfolio up or down right at the opening bell.
So factoring all that in, here is the spotlight trade logic for tomorrow. We are looking at going long on Hindalco. Step 1. They are the base metals leader and they are catching a solid bid on firm LME and Novella spreads. Step 2. Remember that weaker rupee we discussed? It actually aids their export realizations, creating a brilliant tailwind. Step 3. You always must manage your downside. The absolute key risk to this setup is a sudden rollover in China's industrial demand. Play it smart.
Look, you don't need to waste your evening watching dry financial news channels or scrolling endlessly through websites to get yourself updated. You just need to watch this video at the end of the day. To make sure your portfolio climbs faster than National Aluminum and avoids taking a Godrej consumer-sized tumble, hit that subscribe button, smash the bell icon, and let's keep those notifications as green as today's metals segment. But before you go, ask yourself, if that US CPI data comes in scorching hot tomorrow, is your portfolio truly hedged for the fallout? We'll find out together tomorrow. Have a great night and happy trading.